Welcome, everybody, and thank you for joining us at this fireside chat on encouraging effective and inclusive savings, the best practices from the European Microfinance Award 2020. I'm Sam Mendelson. I'm Financial Inclusion Specialist at e-MFP. I'm the lead author of the award publication series that we produce for many years now, and part of the core award team that oversees the selection and evaluation process. Welcome, everyone. First things first, this session is translated into Spanish and French. And so if you'd prefer to listen to the audio in those languages, in the Socio app, you'll see the two tabs on the left menu, and you can please go there. The way it's going to go today is I'm going to kick off with just a few initial slides to give a little bit of background on the award, the topic this year, which, as you know, is encouraging effective inclusive savings, the selection process, the list of semi-finalists and finalists, and then a quick presentation of the new paper on the subject that we have published this week, and which profiles the 10 organizations that made it to the semi-finalist stage and their initiatives and what was most interesting about them. And then my two distinguished guests and speakers, who will bring on in a moment, are going to have a discussion of the 10 organizations in this paper and that made it from the starting field of 70 to this last stage. I'll give a short intro to each of these 10, describe the organization and the initiative, and then we're going to alternate between Chiara and Manoj, who are going to give their thoughts, and we're going to have a discussion about what was interesting and innovative about each. We're going to talk a little bit about some other issues of dormancy and COVID responses, and then hopefully there will be some Q&A that we can take. Please do put your comments in the chat field, and if possible, direct them to one of us or make them as specific as possible. I won't spend a lot of time introducing Manoj from MSc and Chiara. Manoj, though, is a genuine expert on savings and has worked on savings projects all over the world. Chiara was formerly at MFR, but in this capacity, she was one of the consultants that supported our team on the evaluation, application, selection process throughout the year. So she knows this year's subject as well as anyone. But you can see their bios on the session page. But I would like to say thank you very much for them both joining me here. So without further ado, and before I bring them on, I'm just going to show a few slides to give you right. So a little bit about the Microfinance Award, of which the ceremony this year's is this afternoon, but we'll come back to that. It was launched in 2005. It's been annual since 2014. It's a €100,000 prize for the winner and 10,000 for each of the two runners-up. And it attracts applications from organizations that are active each year in a different area of financial services that are really innovative, that deserve the exposure that it can give them. It's a rigorous and multi-stage application and evaluation process. We make no apologies for that. I'll walk you through the process in a moment, but it requires the selection of the topic, plenty of research and a consultation period, development of a concept note, application guidelines, 2 different application forms, and then several committees that progressively evaluate to get down from that full field to the creme de la creme that we're going to talk about today, and they get measured against established criteria. More details on that are in the publication if you want to read it. They also have to submit, they get evaluated on financial performance as well, and so submit audited financial statements and the like. Why does savings matter? When we launched this award at the start of the year, we obviously didn't know quite how 2020 would have turned out. But 2 things have really stood out to me and the rest of the team. The first is that we were able to adapt the process to bring in to make it as easy as possible for the applicants, and that was reflected in the record field that we got, and also to ask specific questions on COVID response. But also it revealed that savings are more important now than ever before. Savings allows clients to consumption smooth. Particularly relevant this year, it allows for protection, a safety net from shocks that microfinance clients by definition are vulnerable to with their generally volatile incomes. It allows to think about long-term planning. There's plenty of evidence about its gender empowerment possibilities. It can create equity. It can be used to save up to invest productively in lieu of loans. It brings people into formalized financial ecosystems with formalized savings, and is safer and more convenient than many of the alternatives. So the topic this year, as you know, is called Encouraging Effective and Inclusive Savings. And we thought a long time about the name of this topic, and it has three clear components that are in the topic. The first is we are looking for initiatives that involve encouragement. Does the savings initiative genuinely understand the increasing discipline of behavioral economics that allows us to understand mental models behind clients' financial behavior that can make savings easy, positive, and valuable for them? Second, are they effective? Does the savings initiative match well with clients' real needs and actually benefit them? And third, are they inclusive? Does it genuinely reach underserved target segments? This may not be very easy to read on the screen that you're looking at. It's in the paper if you'd like to see, but this just shows how the evaluation works in a upside down pyramid. We had 70 applications from 37 countries for the initial short round. It's a few page application form. They give some information on their initiative, on the savings context, and some basic data. 38 of those were accepted to move to round two, where all 38 did choose to proceed. And this is a much more comprehensive process. They needed to present audited financial statements, a support letter, and detailed data. 19 of these were sent to a selection committee of experts, which met in October. Over a couple of days, they chose 10 semi-finalists, among them 3 finalists. And then a few days ago, the high jury met and chose a winner, which will be announced this afternoon. These are the finalists and semi-finalists that we're going to talk about today. And I want to talk briefly about the paper that is available. You can see it on the session site, the session page, or on the EMFP site. And this pulls together the organizations, the lessons, the best practices that came out of this year. And when we start the process of writing this, we really try to create a landscape of the organizations and think, what do they have in common? What distinguishes them? And we came up with 3 main approaches that delineate the best. Some of them really focus on designing products for people and purpose. Are they products that are really based on thinking about who are the people that need them, what are their needs, and what are they for? Second are initiatives that really focus on delivery innovation, making them more accessible, more convenient for clients, and a lot of the time using new technologies. And the third are those that focus on encouraging clients to save, and a lot of this is on financial education. All of these aren't discrete lists, of course. All of the 10 that we're going to talk about today have aspects of all of them, but they're all profiled in one section, and that's how we're going to go through them now. So I'm now very pleased to bring on Chiara Pescatori and Manoj Sharma. Welcome.
Thank you, Sam. Good morning, everyone.
Thanks. Thank you. So let's talk about the 10 organizations, and we're going to start with designing products for people and purpose. And the first of these that we'll talk about is Busa Gonafar, a former winner, actually, about 12 years ago of the award back in the day. And so I'm going to give a short introduction to them, and then we'll hear from Manoj first. Bursa is a non-bank financial institution in Ethiopia. It was founded in 1999 as an NGO. It had a deposit-taking mandate, but only offered compulsory savings until 2012, and it launched a new savings initiative. Bursa's main target population is the poor, with a particular focus on women and young people who do not own land and smallholder farmers. Its main savings initiative that it presented for the award this year is a high-touch model called Dejav Ikub. Dejav means doorstep, and Ikub means local ROSCA, a rotating savings and credit association. They also have Passbook and other savings products. What characterizes it is it's delivered at the doorstep. So they have customer service officers that travel to the client's shop or business to meet face-to-face. They agree with the client on the intended savings frequency, the collection amounts, and there's a real focus on encouraging savings discipline here. Say deposits are collected at regular intervals that the client decides, and spending temptation is discouraged by they ask the client to travel to the branch if they want to withdraw. They really promote it as a safer alternative to informal savings options. And it also there's a focus on encouraging commitment savings too. So when clients really think about a self-defined goal, so saving for festivals or children's education and the like. So let's start with Manoj. Welcome again. What stood out to you about Bursa Gonafar's initiative?
Thanks, Sam, and hello, everyone. I think Bursa, the one thing that really stands out is that it takes a very, a methodology that has been around for many, many years, the SUSU model, modifies it and puts it back to people so that people can relate with it. Anything that is doorstep, I mean, the moment we talk about microfinance, there has been this whole thing about doorstep delivery. And the moment we go into doorstep delivery of savings, doorstep delivery of credit has been around for forever. But the moment we talk about doorstep delivery of savings, because the cost goes up, no collector, no matter how efficient, would be able to cover more than 200 clients in a month. So that's where it makes it really a very costly proposition. In fact, a difficult proposition. And that's what we get from Bursa, that it's a doorstep delivery. The other thing, of course, is flexibility. The bane about savings through formal institutions has been that we are so used to salaried people saving that there is this entire regimen that we put in. You have to put in so much money at this point in time, this periodicity, so on. Poor people doesn't work for them. So the flexibility option that BG provides is another, real thumbs up and standout that they have, that you can save at varying frequencies, you can save varying amounts, and so on. And then, of course, the absolute icing on the cake is the rigorous onboarding process. In credit institutions, we see field officers making 3 to 5 visits upfront before they onboard a client. But in this case, for a savings program, there is this much of interaction. 3 to 5 times the field officer meets the client, discusses their savings need, discusses their history, discusses the sort of cash flows they have, what goals are they going to save for. And I think that's very important. And this whole thing about a client onboarding process, the doorstep delivery, also means that the dormancy rates are going to be fairly low, because you have onboarded the client. There is a process that has been followed to onboard it. And just reaching out, interacting with the client in a community setting, because the client sees that everybody else is saving. So there is this whole community pressure that I should also be doing it. It's a good thing. I need it for my business, for my family, for myself. I think that's really what stands out for BG.
Thank you. Let's move on to Muktinath now. And again, I'll give a little summary here. So Muktinath is also one of the finalists from this year and is a leading national level development bank in Nepal. Established in 2007, has 500,000 total savers, 130,000 of them within their microfinance unit, and 37,000 groups as well. The Muktinath's approach is that their response is that low-income people are hesitant to go to conventional banking branches to access their services, and the costs of doing so for small amounts is significant, and there are opportunity costs for them. So in response to this, Muktinath designed what they call an adapted solidarity group savings model with doorstep services. This encourages positive savings activity with a combination of incentivizing mandatory and interest earning voluntary savings with a dedicated pension and insurance savings products as well, and all offered alongside extensive financial education. Clients are able to save and withdraw their savings at the doorstep during monthly group meetings. And if they need to withdraw on other days, they can come to the branch office and meet with an employee assigned to that village and with whom they have an established relationship. As I said, they have several other voluntary savings products as well, personal savings, pension savings. In that, if the client doesn't withdraw for 15 years, she receives an additional 100% of the deposited amount, so it gets doubled. Festival savings, term savings, insurance savings designed to increase access to life insurance. So there's a whole range of products here, but it's a real combination of mandatory and voluntary savings that I think are interesting. So Chiara, welcome.
Thank you.
What do you think about Muktinath?
So, yeah, as you mentioned, and as Manoj mentioned, I also like for them the approach at the doorstep, how they took the saving groups and readapted in order to really reach the client, which is kind of very important given the outreach. They are in Nepal, clients are located in rural, remote area, most of the time underserved. And they also have a strong focus on women and low income. So this approach to come to the client place is definitely encouraging the saving and making sure that clients are more eager to make their saving on a regular basis. Also, as you mentioned, the customer centricity is very nice because they have very good products that allow to serve different needs. And the fact that there is a pension scheme where clients can receive an important award at the end of the period is really nice and kind of unique. We have seen seldom such approaches. And also the amount of deposit that is requested is very minimum. So, I mean, even the poor clients that, as Manoj mentioned, are not used to save on a regular basis can really be on board easily. One thing, but honestly, that struck me particularly was the self-reliant saving group for migrants workers. I worked for several years in Central Asia, where unfortunately you cannot have saving services unless you are a well-structured bank. But there were a lot of migrants, so most of the money that were coming from abroad were used for consumption. And Muktinath, thanks also for the fact that they collect saving, they promote not only, of course, consumption smoothie, that is part of the equation, but also once they come back to the home country, the institution provide them a loan that match the amount of saving and is collateral free. So definitely these promote entrepreneurship, not only as well-being. And one final last thing that I really liked was also on the training side, to make sure that the client understand the products they're buying and they are engaged with that. They produce drama that is very tailored to the target market. And again, it's very much customer-centric.
Mm-hmm. Thank you. Let's move on to the third of the organizations in this first category of designing products for people and purpose. And this is the Fundustruck cooperative in Peru. So Fundustruck is a cooperative and credit union in Peru. It predominantly services rural micro-entrepreneurs, mostly farmers, breeders, or traders. Most of its clients are rural, and many of them are what would be described as very poor. Fundustruck is interesting for several reasons, but one is the range of the number of products it offers. There's a fixed term saving available in both local and foreign currency and with flexible terms. This is really promoted as an alternative to a pension or other retirement plan. A real problem in Peru is that the welfare system excludes large parts of rural populations, people farmers and the like. So this is a way for them to have a de facto pension. They have scheduled savings. This is a monthly savings plan to achieve a goal determined by the member. So if they want to purchase cows or equipment or pursue a business opportunity, they work with the client to work out how long it will take, how much they need, and when. And this also allows them to access a credit line as well, using their savings as a guarantee. They have something called mobile savings. This allows clients to make unlimited transactions, both in national and foreign currency, to third parties. And I think what for me was I liked the most about this was the savings account for children that they have, designed to help members save to build up a student fund for their children's future education. Fundustruck is really a strong institution. I think that in only a few years has designed its savings products with very much with the client profile in mind. You think about that. They're trying to help them get a pension and really think about children's education, and the need for goal-based savings, and in doing so, really engendering a savings culture among not only clients but clients' children in time as well via that product. So, Manoj, what do you like about Fundustruck?
As you say, Sam, I mean, it's about products, and more products. So the client focus really emerges from the range of products that Fundustruck has. And absolutely, I mean, the pension product and the product, the savings for children, I think this absolutely takes the cake. The fact that they are able to offer a pension product, which is a very long-term, very complex product, means that they have the regulators' sort of blessings, and the regulator would have seen that their systems are strong enough to be able to take money for such long term and to keep it secure for people. I think that's a huge endorsement on Fundustruck. And also, I mean, pension really about if poor people who are not covered under Social Security, rural folks, farmers, who don't have anything for old age, if we can offer them a pension product, I think it's absolute dream, and sort of this organization gets us there. The other thing, of course, is that they have a rural focus. 80% of their clientele is rural. 36% of the clients they serve are very, very poor people. I think the organization has its heart in the right place. Its focus is right. Plus, as you mentioned, Sam, I think when we're dealing with poor people, again, one of the barriers we need to overcome is this bucketization of savings, credit, insurance, and so on. There has to be more bundled products. So, okay, you're saving with us. Can we move you to credit? If you want credit, then it gets bundled there. Or can insurance be bundled with a savings product? Because it's difficult to sell these products to people and then make the selling part stand up. So I think that's again a very big positive for Fundustruck.
Yeah, no doubt. And the way that savings can be used you build that up in order to access to mitigate risk on the credit side as well, particularly useful for farmers. Yes, thank you. Right, so moving on to the second main category of the way we divided these up was enabling savings through delivery innovation. We've just heard about 3 organizations that embody how providers can really think about who their clients are, what they do, and therefore what they need savings for. But now we'll talk about how to facilitate the delivery of them. And there's a lot going on here. And we're going to start with Renaka of Benin. Renaka is the third of the 3 finalists. And Renaka is a union of cooperatives in Benin. It operates through a network of 8 branches and 25 sub-branches, and it's among the 12 largest financially decentralized societies in the country. It was established in 2005. It mainly targets low-income and vulnerable populations in rural areas, and there are over 150,000 savings clients who are individual savers and 12,000 groups. So how does Renaka enable savings via innovation in delivery? Their savings initiative focuses on doorstep collections of local savings via a wide range of products. There are tontine, doorstep models, term deposits, demand deposits, and then also promoting these savings through community savings and credit groups, supported by a mobile application and the use of tablets for secure and trustworthy transactions, so the staff can use them. The particularly of notice here is the doorstep model based on recruiting trained, very mobile female collectors. These are called savings promotion agents. They work in pairs. They're under the oversight of a supervisor. And the idea is that they're able to make a sustainable contribution to increasing the autonomy of low-income social groups and to reduce the cost of accessing financial resources and really raise awareness of the importance of solidarity-based savings among their various populations. Chiara, what is it about Renaka that struck you? Was it the way that they've adapted an old tontine model but used this oversight of the women agents?
I think that the right word to describe Renaka is empowerment. I mean, on one end, is empowerment of agents. The agent, as you mentioned, they go to the doorstep of the client, they work in pair. Women are trained to ride a motorcycle and reach the client, and also use the POS machine, because this is the flavor, the technical part that is very relevant for Renaka. But on the other side, they have these self-managed saving and credit groups that allow, again, to empower the clients they are serving. And considering that 70% of their client base is women, again, and rural, we have 65%, if I'm not mistaken, of clients in rural areas. Again, this empowerment aspect is very predominant and inspiring. And on top of that, they also provide a number of trainings for the customer in order to understand the meaning of saving, also on a client protection on the side, but also to understand the term and condition and how to use the technology, which I believe is a very nice approach to make it inclusive and empowering again.
Yeah, I was struck not just by the training of the clients that was extensive, but also the training of the CSAs as well. There's so much attention given there to the supervision of these mobile women. I really like that it's combining a very old model, the tontine, the traditional in Africa, but with mobile tablets, point of service, and heavy focus on education. Yeah, I like that too. Yeah. Let's move to a very different country and a very different organization now. Mobilink Microfinance Limited in Pakistan. Mobilink is a Pakistani microfinance bank, and it has huge outreach here. I'd say the outreach of this initiative is probably more than all of the other combined. It has over 20 million savings clients as of 2019, and its flagship product is something called Jazz Cash, which is a branchless mobile wallet, works as a traditional e-wallet. The account is easy to open. There's simple and integrated KYC, simple to maintain, and there's a nationwide network of POS agents and ATMs that support this. The e-wallets are really designed for communities with low or no or limited access to any banking infrastructure, remote areas, rural households, female-led households, farm workers, and the like, students studying away, migrants. And it's reached its enormous scale in part, and this is where I think the delivery innovation comes in, is by providing incentives to clients to promote and stimulate savings habits. So, excuse me, there are free GSM minutes they offer, mobile data, partner discounts, and there's also a range of other savings products, a regular savings account, term deposit facility, and all of this is underpinned by a pretty comprehensive financial education program in partnership with the State Bank of Pakistan, and that has lots of different financial literacy modules on budgeting, savings, investment, consumer rights, Islamic banking, branchless banking. For me, I don't know about you guys, but for me, this illustrates the economies of scale that come when you have that incredible infrastructure network to be able to build on and to deliver services in relatively low cost in remote communities where branch access is difficult. Manoj, this is geographically closer to your part of the world, and MSC has extensive work in new DFS on in this area. What is it about Mobilink that interests you?
So, I mean, finally, great to see that digital technology, digital financial services that we always thought would transform savings. Finally, great to see that one organization is able to do it and do it at scale. I mean, you mentioned the numbers, Sam, 20 million clients, savings client, with a very impressive 170 million euros in deposits. That's really good. When digital finance came in, I think we declared victory with just wallets and P2P payments. After a brief gap, when this victory was, people start questioning that, there should have been more to digital finance than just payments. We moved to digital credit, because again, credit will always be the draw. It is where money is made by institutions. So it's great to see that Mobilink is focusing on savings, and you gave a very good account of the financial literacy efforts that are being made. Again, digital platforms, it is so much easier to be able to deliver some of these modules to clients. So, I mean, it's good to see this hybrid emerging, that clients are being provided with the understanding of budgeting and so on, and plus also offered savings product, both a basic savings account as also term deposits. I think term deposits is where people really want to keep money, keep it secure, and keep it for long. Also, I mean, as savings progresses and as newer clientele comes in, the younger people, they would prefer mobile-based savings. And I think that's where, again, Mobilink checks the boxes. It provides stuff like free GSM minutes and so on if you are saving. And I think that is the right incentivization for this next generation that is coming on board.
Yeah, and the financial education was just, it's so extensive, the modules they offer as well. Yeah. Right. Let's talk about a different use of technology now and move to Ghana for DSS Platform Limited. DSS is another institution that, like Renaka before, has taken a centuries-old model into the 21st century, but this, in this case, does so by providing services to enterprises rather than end clients. And these are SUSU savings enterprises. SUSU means plan and involves informal daily doorstep savings. This is hundreds of years old in West Africa and beyond. So DSS is a fintech. It evolved from a former SUSU provider itself, and it's established a digital platform to systemize the operations of its network of client SUSU providers and to improve the quality and safety of their delivery. This reduces the risk to the client and the collector, increases transparency and accessibility while building on a well-established practice that people understand and know. The one thing that struck me from this was how DSS recognized that there are real challenges in traditional SUSU savings. Primary among them is the misappropriation of cash by field agents, which is a euphemism, I think, for stealing. And what they've identified here is the real need to keep the elements of trust and regularity and interpersonal relationship, but make it more trustworthy and more transparent. It offers three main varieties of SUSU savings. There's a regular account, a SUSU Plus account. This is for price-sensitive people, especially young savers, that has no charges on the account, but a minimum balance. And then there's a business account too, with free withdrawals, no minimum balance for all accounts. And I think this was interesting. Clients are issued a smart card with an account number too. Chiara, what interests you about this model?
Thank you, Sam. I fully agree with you. What is really interesting here is how tradition and old-fashioned saving model has been kept and redesigned to adapt to the 21st century. I mean, I really like the fact that they kept tradition and they build on tradition to make it better to fit the client needs. Again, it's the customer centricity topic that comes back, and clients are more safe, but still, I mean, they are comfortable because the product is something they know, and the modality, the way it's delivered, they know it. It's just a matter that the means, how it is shaped, is a bit different. And one thing that struck me again of this product is that there is a training program, which is very crucial. The moment you have something traditional and you make it technologically new, you need to train the clients, because the onboarding is very important, and the fact that the client can understand the product is crucial in the delivery of such service.
Right. Let's talk about Ujiban now, the last one in this section. Ujiban is a small finance bank in India, and another, like Mobilink, very large scale, has 2.3 million savers, over €1 billion in deposits, but still most of its clients are really microfinance customers, most of them economically empowered or economically active poor women. There are a lot of aspects of Ujiban that are interesting. It's very much an approach that could have probably gone into any of the three main silos that we've described here. There's lots of different products. There's a simple and flexible savings account, which they market as an emergency account, very important this year. And there's a section in the paper on the applicants' responses to COVID, which those interested in this should go and read, because what they did on their emergency account was very interesting. It pays 4% per annum on balances, and clients can withdraw the entire balance at any time, which is particularly important if you've suffered a shock. The Ujiban also innovates to ensure the delivery of these products by, there's been large-scale reskilling of microfinance staff towards banking services. There are doorstep services through technological deployment, over 8,000 mobile ATMs, digital tools for field staff. There's a 24/7 DigiBuddies line, which assists customers in multiple languages in how to use digital channels. And there's mobile banking, phone banking, SMS banking. So really a whole range of ways here to make savings easier and more convenient to the client. Manoj, is that how you see it?
Oh, absolutely. I mean, Ujiban was a credit-only institution till not very long ago. So it has obviously made this transition into a full-fledged bank. And it's a huge leap because the moment you get into core banking and a range of products, it makes things very, very complex, even from an asset liability perspective. To be able to have $1 billion out there, which can be withdrawn any instant, it's a difficult product from the risk management perspective. But it's a hugely needed product by the clients. And I think that's why it is a hugely popular product as well, because with the digital channels, you are able to offer it at their doorsteps. They can save, carrying interest. They can also withdraw it in one shot if there's a need, if there's an emergency. And I think that's what makes it really, really good. And what's the icing on the Ujiban cake, so to say, is the financial literacy modules that they have. It's unlike Mobilink, it's in-person financial literacy. So they actually put in a lot of effort driving financial literacy, and the chiller banks, and anybody 11 years and above of age is eligible for those financial literacy sessions, which are offered free of charge. So I think it's a very comprehensive offering from Ujiban in terms of, and fulfills a great need.
Yeah, in fact, when we're putting together the paper, there's a lot of stuff about Ujiban in the third section and encouraging clients to save, because the many different aspects of financial literacy that they do, and in person and remote, it was very impressive. So let's move on to that last section now, encouraging clients to save. And as I said earlier, there've been real advances in recent years in how we understand the mental models, the pain points behind how people, not just poor clients, but all of us everywhere, think about decisions. And so there are three organizations here that I feel really understand this. The first is Renew, Private Microfinance Limited in Bhutan. And this was founded in 2011 as a cooperative between an NGO that focuses on women's empowerment and the Savings Bank Foundation for International Cooperation in Germany. What I think is interesting here is Renew has developed a savings encouragement model that combines different behavioral approaches. There's mandatory financial education, some compulsory savings that can only be withdrawn with special approval or by closing the account. But some organizations use compulsory savings only as collateral for credit. This is not the case here, because actually only 10%, fewer than 10% of savers are also borrowers. The purpose here is to inculcate savings behavior, and so alongside a financial literacy module, they help to set goals, saving methods and techniques, expenditure management, and it does so via a whole range of doorstep products as well. Chiara, what did you like about this initiative?
I fully agree with what you say. Definitely the education part is really interesting. The video, the spreadsheet that are given to clients on how to manage income and expenses, to monitor the household budget. And definitely their core is customer care and financial education that work together all the time. What is really interesting as well, that is a microfinance provider from Bhutan. We seldom see operation from there, and they really have a deep rural outreach and again empowerment of women and farmers with volatile income to make them financially independent. I guess also the mission they have is really strong and extremely interesting.
Yeah, for sure. Well, let's talk about Opportunity Bank Serbia now as well, because this is a really interesting one for me, and it's quite different than many of the others. So I think everyone probably watching this knows who Opportunity are. And OBS was established in 2002 as Opportunity Savings Bank, transformed into a commercial microfinance bank in 2007. It has a whole range of savings products in both euros and local currency. But what's really interesting here is something called Stash, which stands for Save That Cash. And this is a unique combination of savings and credit to target clients with low and informal incomes. OBS, they talk a lot in their application, didn't they, Chiara, about how a surprising number, a shocking number of Serbians are financially precarious, wouldn't be able to meet a fairly modest sudden payment, and without much of a savings habit. And the way, so Stash is part of a larger financial education initiative. I think that's interesting, by Opportunity broadly. And this initiative is called Savings Hopscotch, and it teaches people how to save through 7 steps. Set your goals, define income and expenses, separate wants from needs, and determine monthly budget, etc. But you know what? I think this maybe, Manoj, you can explain the what's interesting about the actual Stash account as well, because it's a loan. It starts as a loan, and then it becomes savings. And it's an interest-free loan, but pays considerable interest. Can you tell everyone about it?
Yeah, this is a very, very interesting product. I mean, I haven't come across such a product where a client gets an interest-free loan that's put in the client's account. The client sort of keeps it for a year, and then the client can withdraw it as a loan. So it's basically this whole process of seeing that there is money in your account. It brings in a certain level of self-discipline, that there is money, but it's parked for a purpose, and that purpose is realized at the end of the year. You can withdraw it, make the savings. So again, I mean, I think Stash really underlines this need for hybrid products where there is an element of savings, there is an element of credit in it. It's about, again, bringing in financial discipline. I think that's what we talk about. And again, what's really stands out is that from 2017, Stash has only lost 7 clients. 7 clients have left the Stash account, and 94% of its clients have taken the highest loan amount, which is 410 euros. So it's an extremely popular product. And really a very innovative product. I mean, absolutely hats off to Opportunity Serbia.
Yeah, and also the approval surveys and the follow-up shows there's very, very high retention here, and perhaps that's not surprising. If someone gave me an interest-free loan, which if I didn't do anything, then it would become savings. I'd probably be fairly happy as well. And there are questions about sustainability because, and replicability, but I think important is to see it as this is a financial education initiative, right? Not a savings product that's supposed to be expanded to millions of people, but it is interesting. Let's move on to the last one. I want to make sure we've got time to talk about some other things. So let's try to move quickly onto this. And we're going to talk about Fundustruck. And this is, again, you, Manoj. And the Fundustruck is in Senegal, and it's an MFI. It operates in a municipality which has been subject to significant armed conflict for more than 30 years. So this is a difficult context. Serves very, very poor women and provides traditional village banking coupled with impressive non-financial services. There's training on household budget management and savings. And whenever a beneficiary, a woman, enters the program, she gets 6 initial awareness modules. And there's also an annual training plan that specifically designed to address a illiterate or semi-literate audience. And there are modules on economic empowerment and separation of household and business budgets, among others. The account, the product, is an individual demand deposit account called It's Possible. And it's created for each beneficiary, but within a savings group. The members meet every 2 weeks, and they require a minimum deposit to be paid each time of about 70 euro cents. And it's done at the client doorstep, so a bit like some of the ones we heard in the earlier section. And clients can, of course, decide to save more than this minimum. Manoj, what did you think?
Yeah, I mean, a women-centric, women-focused savings product. 99% of the clients are women. 40% of the clients have never had credit from any institution before this. So one can safely say that at least 40% of the clients, for them, this is the one and only institutional savings platform that they have in a conflict zone. That makes it absolutely outstanding. And very low savings thresholds. I mean, 70 euro cents, as Sam pointed out. I think having that kind of a collection methodology, making it stand up, paying 2% per annum interest rate on that, I think that really makes Fundustruck stand out, along with the financial literacy modules that go to promote the savings. Make the clients
perhaps more than any of the other semi-finalists, this is where the inclusive part of the topic really stands out, doesn't it? It's 99% women. There are lots of under 25s, extrememely isolated. 40% have never had access to credit. So we're really talking about the financially excluded here. And also, I thought the 2% per interest is very interesting. That's a sufficient rate of interest to really encourage savings. That's right. So what I'd like to do now is, I'd like to talk to Chiara. I'd like to ask Chiara her overall impressions of the process and what it's been like, because in our team, we spent the best part of this year reading applications that started with 70 and came down to this. And so we spent a lot of time thinking about savings this year, haven't we? What are your takeaways from it?
I really enjoyed the process. I mean, I've been a rater for years and I'm now independent consultant. I really like to see institutions. So what really was impressive was that we were at the beginning, I think the World Health Organization just declared COVID-19 pandemic when the application started, and we received 70 and 38 of them filled in the second round of application. That was very demanding. And that, for me, was a glimpse of hope. Like the institution were busy trying to manage the future with very uncertain perspective, and still they were willing to participate in an award, show what they were doing, dedicated time to that. We also asked them additional information on the financial statement to assess the financial performance. And all of them, they were promptly responding. It was really encouraging. Definitely for me, it was a glimpse of hope. And also the fact to see so many different initiatives all across the world, all center of producing services that were really tailor-made for clients, and also properly aim at serving the bottom of the pyramid in a very well-structured and well-thought fashion.
Yeah, that struck me too. One was because we asked additional questions, didn't we, after the process had already started, and this was sort of getting into February, March time, and it became clear that COVID was not going to be a blip, but was going to be transformational. Yet, and so we asked them about their responses, and they were really engaged on being willing to talk about it. And yes, and then we asked them for audited financial statements for much later on than we normally would, when they are really struggling, many of these, with the moratoria and the like, and they were still very forthcoming. So I was impressed with that too. Manoj, I'd like to ask you your impressions, not so much of the process or of these particular 10, but how does what you've read here, when we've talked about over the last couple of weeks, how does it tally with your own experience, your own projects you've worked on, and savings generally?
So I think, for me, what's really interesting is, of course, that we see a savings focus from the European Microfinance platform, to be able to say, okay, let's pick the ones who are doing well on savings. The other thing is that, as I said, the bucketization that we see on products, savings, credit, because from a regular income person, that makes so much sense that I want to save, now I want to borrow, I need insurance for a particular product. I think we are seeing some elements of that hybridization, that sort of coming together of different products that then allow us to meet needs. I think that's becoming visible, and that's very, very comforting, I would say that. And then, of course, we are seeing technology seeping it, not really at a very brisk pace, which is really good, because technology shouldn't become the end all. I mean, it's clients have to catch up with technology. The one thing we worry about most is that in our enthusiasm that technology is going to solve everything for us, we just go so far ahead, the clients get left behind. And frankly, instead of having an inclusive technology, we start excluding clients because of technology. Yeah. So I think that for me. Yeah. Yes, sir.
No, it's because you're right, because there are always trust barriers, aren't there, when you're talking with low-income clients, and particularly you're asking them to give you their meager savings that they've managed to put together. And it's important that agents and collectors really can embody this trust, right? I think most of these applicants really think about that.
Yeah, I think trust is a very crucial thing. I think that's one of the reasons, because of the element of risk that is there in savings collection, especially the collection from the doorstep and then bringing it back into a branch, that most institutions really worry about this leg. How do we ensure? And that's where we see it's very difficult to give flexible savings products, because if it is a fixed amount, at least we know this amount is going to get collected. This is what is going to come into the branch. The moment flexibility is introduced, how do you know the collector has not pocketed some of the money? And that's what starts making these products very complex, actually. They are required by the market, but it's very difficult to administer those products. I mean, you can't, the moment you're going beyond 50, 100 collectors, you can't be physically monitoring each of the collectors. The client is vulnerable. The client doesn't understand the technology. So how does the client really know that this money is now going back into my account? I think making those processes robust is quite challenging.
So we've got sort of 7, 8, 9 minutes left. So if you please, this is to the audience, please do add questions. I've got some interesting comments here from people who are watching. Thank you, Lucia. But while any come in, if they're going to, I'd like to talk about dormancy a little bit with you both, because this is the sort of specter that sometimes hangs over savings. In India in particular, the top line numbers of account uptake are very impressive, hundreds of millions of accounts opened, but you need to look beneath that veneer to say, well, are they actually being used? Are they actually valuable? Or is this just meeting some SDG or some national target? And this was something we had to struggle with this year, didn't we, Chiara? Is how do you measure real usage? We ask for, account activity data and usage data, and you get a big variability in what organizations will give you and what they even can give you. And in the box on this subject, in the paper that we wrote, we did something that wouldn't normally done, which is editorialize a little bit. And that was a call to arms to say that the sector needs to find a way to invest in TA to help organizations so that there can be standard setting here. Any thoughts on how we could do that?
Education, in my opinion, is just education. As Manoj mentioned, if there are two things. One is education, the other is trust. I'm gonna use something if I trust that. And also, especially for financially literate people, the moment I give your money, but even for me, the moment I choose the bank I'm giving the money to, I need to trust that. And I really need to understand all the term and condition that this contract entitles. And I really like this, the institution that applied to the award this year, because several of them to really embrace the concept of educating client and making sure that those accounts are not just open, but are used because the client, again, feel comfortable to put the money there, but also understand how to take the money out when needed. And these only come, again, going to the client and explaining, especially if you deliver something like, I don't know, Mobilink is doing very technologically driven, or the DSS, you are changing what is tradition to a new, with a technology flavor.
Manoj, you're in India, and I think more than any other, the high level figures on account uptake can be a mirage. What do you think? How do you measure real usage and encourage it at the same time?
So, I mean, recently the government put through to 206 million women account, 206 million account of poor women. The government put through 500 rupees a month for 3 months. So that's about $7 a month, each month for 3 months. So it's $20 overall. Only about 60% of this money was withdrawn at the other end. And that tells us that 40% of the women either did not get communication that the money has landed there, which is possible, or dormancy. Because of dormancy, they don't even know that they have an account. So it was opened as part of a large drive from the banking sector that, okay, the government pushed them to open bank accounts, but then they were promptly forgotten that now I have a bank account. So I think dormancy is a huge issue. Just imagine the amount of money that would have been spent to open these accounts. And now,
Right.
Of course, we're not able to leverage them when it came to the sort of crunch so to
Right,
say.
because savings is much more than an account, isn't it? It's in the paper, describe it as savings as a verb, right, and not just as a noun. And savings is about a way of thinking, of planning, of putting aside certain things for whatever the purpose. But if it's only used as a channel to receive direct benefit transfers from the government, is that even savings, or is it just payments and transfers, right?
Yeah, and I mean, what we are seeing is, and this is really unfortunate, that poor people don't allow that money to sit there for even a day.
Yeah.
And again, it's down to communication, and as Chiara pointed out, to literacy. So the feeling is that if I allow this money that has come from the government to stay, the agent tells them that this money will be returned to the government, because the agent's incentives are linked to this money being withdrawn. Till the money is withdrawn, the agent doesn't get paid. So the agent says that if you don't take this money out, this will go back to the government. The other worry that poor people have is this: if this money was to lie in the account, the government might feel I'm not poor, and the government may stop sending it from next month.
Right.
So, I mean, unless we sort some of these things out, this is just a channel. The money stays digitized.
Or the tax collector will come, and suddenly you find that your local rates are going up because I've heard that too firsthand.
So
we're at the end of time now. So I want to first thank you, Manoj, and you, Chiara, for not only doing this today, but also for the taking the weeks to prepare for this, to be so informed on all these initiatives. Thank you for the audience for joining and the translators. I would like to encourage everyone at 2:00 Central Time to come to the award ceremony. There will be speeches, there will be videos profiling the 3 finalists, and there will be the announcement of the winner. Please, if you're interested, you can find the paper that has been written on the session page and also the EMFP site. In 15 minutes, there's the savings plenary starting on creating an effective environment for savings. So this is really how the regulatory conducive ecosystem behind savings. That'll be fascinating. Please join for that. And don't forget to check out, if you haven't already, the conference foyer where the be various updates, and also the wall, the exhibitions of the exhibitors and the networking. So thank you very much. I wish you all a good couple of days remaining on the conference. Thanks for joining today. And thank you. Bye-bye.
Thanks.
Thank you.
Thanks, everyone.
Bye.
Bye.
Time for me to open the window here to get some fresh air. Maybe for you too, it's time to get some fresh air, maybe even a refreshment. See you in 15 minutes.